Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm here with another video. And this time, this video corresponds to the market. So, the markets are in a complete tailspin. So, we'll discuss about that. I have kept on saying over the last 3 months or so that the markets are headed downwards from those high levels of September. So, we'll discuss about that, and that's why I'm making a short video right now. So, let's get started. First of all, disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do it with their own due diligence and research, and I'm not in favor or against any company that I talk about. I am not a member of the NSC and BSC, and that I am not a portfolio advisor. Whatever discussions with respect to markets or investments I do have here is purely on the basis of my experience into the market, and whatever decisions with respect to investments or trading you take, kindly take that on note that it is laden with market risk, and kindly do consult your financial advisor. Now, before I talk about the market sales, more requests, kindly support me on Patreon. Once you do that, help me grow the channel. Help me also ask me questions, seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, a watch list that I keep updating on a monthly basis, analysis on companies, discussion on global and domestic economies, a long-term pick from my end every week, and whatever queries you're having, I'll be answering that. You can be a member on YouTube as well or on WhatsApp. Now, just quickly, we just go to the TradingView website and we'll discuss about this. This is complete carnage that is taking place in the market. So, what we are seeing, and let me just give you an idea of the indices. In the mid cap index, we are down somewhere around 3.5%. The India VIX is up 7%. It's around 16. The Nifty is itself down 1.5%, 1.3%, and the small cap index is also down 3.5%. So the major pain is in the broader markets, the small cap and mid cap indices, which have fallen big time today. And probably today, I feel, is the beginning of the end with respect to the fall that we have been seeing over the last 3 months in this market. So in September, we made a high. In December also, on 10th of December, on the small cap index we went to somewhere around 58,000, and from there on in the market has completely nosedived. So over the last 1 month the market is down some 8,000 points from the top, 14-15% from the top, and over the last 3 months it has not given any returns whatsoever. So in September also we were somewhere around 58,000, and now we have fallen. What I feel is this is the best time, if you have funds, to get into the market and buy top quality companies. And if you don't have funds, you're fully invested, just take the pain for the next probably 2 weeks, 3 weeks, and we could be out of the woods sooner rather than later, because the RSI here is around 26, 27 on the small cap index. On the mid cap index, it's even worse at around 23. This is a 1 year RSI on a 1 year basis, and it is extremely oversold, this market is. And we could be looking at a scenario where the recovery could take place as early as from February. I believe that this time around the budget could be the trigger for the market to turn around from here. We could be in for slightly more, you can say, selling over the next 1 week or so, but that's just about it. I believe from 22nd, 23rd onwards, post the speech of Donald Trump, and whatever happens in the US market, US, you can say, political scene, we should do well. One more thing you need to look at is today's low on the mid cap index is somewhere around 52,600. If we go back to the highs of before the elections in June, the high was around 53,700, and there the low ended up to be somewhere around 48,000 or so, and that was the highs of the last year. So I think around 48,000 is the worst case scenario on the mid cap index. Similarly, on the small cap index, I believe around 47, 48,000 is where we should bottom out at worst. But I don't think that we are headed much lower from these levels. And in that respect, if you have good quality, top quality stocks that are producing very good numbers, try to be, you can say, invested into those stocks, and try to hold on to those investments for the longer haul. I think over the next 18 months we should be headed towards somewhere in the region of 29,000. I believe that, again, if you see the numbers on FY26 basis, right now we are at 23,130 and falling even further. If you see from an FY26 basis, I believe that the earnings would be around 1225. Based on that, at around 23,000, let's say if we head towards 23,000, based on 1225, we are trading at only 18.8 times, which is not at all expensive. I believe on that 1225 rupees, which is a very understated, you can say, number from a 1 year perspective in terms of growth. uh, at 23.7 times, which is an average high we could expect, we should be headed towards 29,000 to 29,500. I feel over the next 12 to 18 months we are headed there. So the downside, in my opinion, is around 5 600 points at around 22,500. Based on 1100 rupees of earnings, we would be at 20 and a half times, and that is normally where the markets normally have bottomed out over the last 4 5 years. Post the pandemic, it has been around 20 to 20.5 times current earnings. That's where the market has bottomed out. So around 600 points downside and 6,000 points upside is what we are looking at. So I don't see any reason to panic for anybody who has a 18-month time horizon. Somebody who is a trader who is looking to make money on 4 weeks 6 weeks basis, yes, they need to be in cash, they need to respect stop losses, etc. Otherwise, get into top quality companies which you always wanted to buy and hold on to them for the next 18 months. Have an 18-month time frame, and you should be making a handsome, you can say, return over that period. That's my assessment. The major reason for this fall has been the dollar index and the way the dollar has strengthened against the rupee. Rupee is now headed towards to 87. Sorry, the dollar value is headed towards 87 rupees, and that is the major reason why the markets are falling. But I think they are going to price everything in around the budget time at max. So this was a video on the market. Please like and subscribe my channel, hit the bell icon so you get my videos straight away when I post, and kindly support me on Patreon. Thanks a lot for watching.